Good morning. My name's Ryan Littlestone from forexflow.live. We've had another busy week this week. As I mentioned in the video last week, we came in with a bit of a tug of war between the different risk events that were in play. On one hand, we had the countries reopening or trying to reopen after the virus effects. On the other hand, we had the worries about the US and China rhetoric, creeping up again. And what's happened last week is that we started off the first part of the week with the reopening theme, and we saw risk bounce. Then we had the news from the EU that they were working on this 500 billion recovery fund. That added to the boost as well. We saw oil rising, risk trades in general rising, yen getting sold off. And that continued through the week. And then just at the end of the week, we had a big turn where China was starting their plenary meetings that they do in the government. And the bum fight, if you like, between the US and China, the war of words, has crept up again with Trump throwing things across on Twitter and China responding, throwing to the mix China and Australia with tariffs on barley or anti-dumping sanctions on barley, as well as throwing beef into the mix and other things coming in. So the week really has switched, and from Thursday, Friday, we saw risk just falling off and wiping out pretty much everything that happened in the early part of the week. So that's how we ended the week last week, and we're going to need to see whether we continue that this week. I don't think it's going away, but we have to assess what goes on. Now, one of the trades I was looking at last week that I prompted in the video was dollar versus the Mexican peso, which I saw as a good trade for a short to get on this reopening theme. And what we saw is that picked up. There were some headlines out of Mexico that the PM president isn't going to penalise private firms. And just generally the theme was that things are getting better over there. And that indeed has seen the price of dollar MEX fall. There was a big level. If we look at the charts now, I've got the 4-hourly chart here. We had a fairly concise level at around 23.50. But the big level was up at sort of 23.90, 24. I wanted to see a real break of that level. And we finally got it, and it's pushed down lower, and we've seen it come right the way through the levels, carve through the levels, if you like. The next level on the chart was around 23.50. Below that, around about 23.30 odd. And then we hit the 38.2 fib of the Fed move up. That was around the 23 handle, 23.02. We've broken below there, and then we broke below the March low briefly. And that's where we've been sitting as the week closed out. So I'm short in this pair, as I mentioned last week. I have cut on the way down. I'm looking to push it further, see how we go. I'm not in as big a trade as I was looking at. I was looking to scale in higher up in towards those highs that we saw, 25, 26s. So it's only a pretty small trade, but we're not going to complain when we've got a winner on. So this is the pair I'm going to continue to look at. And as I say, I'm looking for further downside in this, but I'm going to be mindful of the upside. I've brought my stop right down now to 23.80. And depending on the news and if we see a move higher and what the drivers are, then I'm going to look to add back into the short position and see how we go. But as I say, the risk switch has happened, and it can all change in this new week, as we know. All it takes is a headline. So for that, we've got to monitor these risk situations. We've got the two themes in play. At some points, one exerts its pressure over the other, and we've just got to go with it and keep our trades nice and tight and be prepared to chop around. So as usual, I wish you luck this week, and all the best for your trading.